The American supply juggernaut is the main reason why oil markets have not tightened as many expected. Crude oil production from the U.S. reached a new all-time high of 13.2 million barrels per day in September, according to data released last week, outpacing expectations and causing a big problem for OPEC+, which agreed last week to further output cuts in an effort to prop up faltering prices. The U.S. accounted for 80% of the expansion in global oil supply this year, according to the International Energy Agency, and its production is expected to grow by 850,000 barrels per day, well below the pace reached earlier in the shale revolution but much faster than analysts had forecast. The American supply juggernaut is the main reason why markets have not tightened as many expected, Rapidan Energy President Bob McNally told Financial Times. Scott Sheffield, CEO of top Permian Basin producer Pioneer Natural Resources, told Financial Times he is very surprised by the growth, adding, "There's a good chance we may reach 15 million barrels per day within 5 years." Shale remains relatively early in its life in terms of the technological advances that could drive higher productivity, Chevron Chief Technology Officer Amir Bonner said. Crude oil futures settled higher Friday for the first time since OPEC's November 30th announcement of additional voluntary production cuts, but the rebound was not enough to avoid a seventh straight weekly loss. Front-month NYMEX crude for January delivery settled plus 2.7% Friday to $71.23 per barrel, and front-month February Brent ended plus 2.4% to $75.84 per barrel. For the week, WTI fell 3.8% and Brent dropped 3.9%. Also, January gasoline closed plus 2.4% Friday to $2.0498 per gallon, while January diesel finished plus 1.3% to $2.581 per gallon, down 3.4% and 3% for the week, respectively. Concerns about slowing global growth and China's economic health are mounting after rating agency Moody's lowered the country's rating to negative from stable, according to a research analyst at Leveraged Shares, but newly released U.S. economic data was upbeat, with jobs created in November totaling a higher than expected 199,000. Separately, the U.S. Department of Energy announced plans to buy up to 3 million barrels of oil for the Strategic Petroleum Reserve, part of ongoing efforts to refill the oil reserve following the large drawdown in the SPR last year. The energy sector was easily the week's worst performer, down 3.3%.